Typically when investing, you have to choose between one of two good things or one of two poisons, depending on how you word it. On the one hand, you can choose between high-flying momentum stocks that usually have strong fundamentals, strong market sentiment, and they just keep soaring and soaring. And so when you buy them, you typically have to pay a high price, what many value investors would consider overpaying for the stock. But the hope there is that the positive momentum will keep it moving higher for you. And then presumably you can time the top and sell it and then rinse and repeat. The other approach is buying on a value basis. You typically saying, hey, I want to buy a company or a fund or whatever it may be that is undervalued. It's priced at what you think is less than the intrinsic value is worth. And so there the hope is that, okay, I'm going to buy it, be patient. Eventually the market sentiment's going to turn and that's going to make a big profit. In the meantime, my downside risk is somewhat limited because I'm buying on a value basis. That's fine, but it typically takes considerable stomach because you're buying almost always a company or a fund from a sector that is out of favor. Fundamentals may not be very good. You also run the risk of catching a falling knife that, the market is onto something, this is falling, but it can fall much further. And of course, there have been numerous cases of this over the years. And so typically you have to choose between one of those two routes. They both have their cons for sure. However, every now and then the market may be positive on a fund or a stock and it's soaring higher, but you notice it early enough that you realize, well, it may be hot, but it has way further to go. It remains deeply undervalued. It's kind of like buying Nvidia when it first started to turn a corner and zoom higher. If you had the vision to say, okay, this is just the beginning of this huge AI runway and Nvidia is going to be a major player in it, you could have hit it big. And yes, you'd be buying a stock that was hot at the time, but it had way higher to surge. And in today's video, I'm going to share two funds that I think, while they've been soaring higher recently, they have far further to soar in the coming years, and so I think that they remain deeply undervalued. Before I get into these two ideas though, if you could please give this a like, I would really appreciate it. Help do me a big favor as I provide these videos for you to get it further visibility on YouTube. And the second thing is if you want to get regular updates on my top ideas for both funds and individual stocks, as well as some of my lessons learned and some of my strategies to generating strong returns with high yielding dividend stocks, please subscribe to the channel. I try to put out several videos a week and add a lot of value to you, so thank you so much for considering that. Okay, now the first one I'm going to talk about is the Alerian MLP ETF. It's ticker symbol AMLP. Now, why do I like this fund so much? Why is it a hot fund that is going to head higher? Well, if you look at a stock chart, you will see that it has significantly outperformed the S&P 500 in recent years. And the big reason for this is if you look back in 2020, the sector and the fund, AMLP, crashed hard. And that was because when you had the COVID outbreak, you had lockdowns, you had trade stopping in many cases, you had travel stopping. And so energy consumption plunged. And you have a very inelastic situation where energy supply is fairly fixed. And so any small changes in either the supply or the demand has an outsized impact on the price. And so oil prices absolutely plunged. In fact, I remember some quotes were saying it was somehow in negative territory for a while, if that even makes sense. Like they were literally, you're having to be paid to take and store oil because there's just too much of it because the demand had plummeted so much. And so MLPs plunged because while they themselves have limited exposure to commodity prices, the fact that the sector had crashed caused a lot of doubt about the future outlook for MLP's infrastructure for oil companies, because if oil was crashing, production was going to crash, and therefore demand for their assets may also crash. And so MLPs just went in the dumps. But since then, the economy reopened, oil prices rose, demand really didn't change. MLPs ended up posting very solid numbers in aggregate that year fundamentally, and so the price recovered. And then you had also Vladimir Putin invade Ukraine in early 2022. That caused some uncertainties in the global energy markets. Oil prices rose. Europe and the United States realized we can't be just passively depending on potential geopolitical adversaries like Russia for our energy, and so we need to develop our domestic energy supplies more. You also had interest rates rising, inflation rising, and with that, oil tends to do very well in inflationary environments. Additionally, the higher interest rates put a damper on the projected growth rates because of the increased cost of capital for the renewable energy sector, and so that meant there was less competition for hydrocarbons. And so all those things combined to be a major tailwind for midstream infrastructure, and so MLPs continued to push higher. And even since then, the very strong balance sheets that MLPs now have because of the difficulties during COVID and some of the threats from renewable energy and the ESG investing movement forced them to be much more disciplined about their balance sheets. So they slashed leverage, they slashed capex, they generated a lot more free cash flow. Now most of them are all self-funding their capital programs. They are have very strong investment grade credit ratings with leverage ratios materially lower than they were just a few years ago. They're covering their payouts very conservatively with cash flow. They're buying back units, they're buying back preferreds, they're investing in high return, low risk organic growth projects and bolt-on acquisitions. So all that has been a major tailwind as well. On top of that, now since President Trump has been elected, he's been very supportive of the U.S. energy industry, including and perhaps especially hydrocarbons, and he's directed his team, the departments, to be very friendly to new infrastructure projects for the energy industry. And so that helps MLPs because it opens up more growth opportunities for them with less risk of the growth opportunities running into regulatory snags. And so all that is combined to be a major tailwind for MLPs, and so they've moved higher. But now you also have the AI boom coming into play, and that is, first of all, driving up incredible demand for strategically located natural gas infrastructure. Companies like Enterprise Products Partners, Energy Transfer, Enbridge, Williams Companies, Kinder Morgan, TC Energy, the list goes on. These are all companies that expect to benefit from natural gas demand for data centers that will use some of their critically located infrastructure. And so that's a big tailwind that could drive more growth opportunities for them. Additionally, you have export booms to countries in the Far East and Europe who are now wanting to import more and more LNG and NGL from the United States. And so that's been a big export boom that companies like Enterprise Products Partners, Energy Transfer, and some others have really benefited from significantly. And so you have all these factors that continue to drive growth moving forward, and I see that as a huge tailwind for the sector. With all that said, AMLP yields almost 8% today, despite all that strength, all those recent positives for the industry. And so it still has a very high yield. And if you look at its top holdings, again, like names I've been mentioning, Enterprise Products Partners, Energy Transfer, MPLX, Plains All American, Western Midstream, et cetera, they have guidance for pretty strong dividend growth or distribution growth for the foreseeable future, with even MPLX saying, hey, we're probably going to grow our distribution at a double-digit rate for the next several years. And so I don't see any reason to expect that distribution growth rate to slow for AMLP. I think it's going to continue to be mid to high single digits in the coming years, which is going to beat inflation quite easily. And so you couple that with the high yield, with the highly contracted cash flows and the strong balance sheets of the underlying holdings, the blue chip nature of those holdings, all the macro tailwinds. And I see AMLP having quite a ways to run yet. We're looking at probably low to mid-teens total returns just from the distributions plus distribution growth, assuming a constant yield and valuation multiple. But if we have some yield compression, especially if interest rates start to fall, if we see valuation multiple expansion from growing market bullishness on the AI boom, if interest rates do come down at some point, we're looking at much higher total returns than even that. And so I think AMLP, while it has very strong fundamentals and strong market sentiment today, I think it has much further to run. Okay, the next sector that I'm really bullish on is gold mining stocks, especially blue chip gold miners. So a fund like the one that's ticker symbol GDX, you can get as a ETF that's relatively low cost in its expense ratio, doesn't have any leverage or any goofy risk like that. It's heavily concentrated in leading blue chip miners like Agnico Eagle Mines, Newmont Corporation, Barrick Mining, Silver Wheaton, Precious Metals, all sorts of companies like that. It gives you that exposure to some of the best assets in the world, best mining assets in the world, along with the levered exposure to the gold price. And if gold prices continue to do well, GDX is likely going to soar immensely higher. And so there are several reasons why I think that GDX, if you look at its performance over the past year, and certainly year to date, it has been phenomenal. Year to date, it has crushed the S&P 500. And there's a good reason for that. Gold has been on a tremendous run for the last several years, really since the fall of 2022. And so gold miners are just really playing catch up. They're barely keeping pace with gold in terms of percentage total returns in aggregate. And that's largely because they have been lagging until this year and they played some catch up. But really gold miners should be much higher than that because again, they're levered to the price of gold. When gold prices rise, gold mining prices rise much higher because they have a lot of fixed costs. And so then when their profits rise, their profit margins shoot up. That's a lot of incremental free cash flow. With every dollar higher, the price of gold goes. Whereas when the prices fall, gold miners fall much more than gold prices because, again, their profits are levered to those fixed costs. So again, GDX I think has much further to run just looking at where the gold price is relative to where GDX has been. And so that alone is a reason to be bullish on it. But there are other reasons I'm bullish on GDX. If you look at its underlying holdings, for example, Barrick Mining, Newmont Corporation, both of those are blue chip miners that are turning a corner in their fundamentals. They're generating a lot more free cash flow now. Newmont is buying back a lot of stock. Barrick has been buying back some stock. They're both paying dividends. They have some growth projects they're ramping up. They've got growing exposure to copper as well, which is another very exciting investment opportunity. And yet they trade at huge discounts to their historic price to NAV valuation multiples. And so with all that free cash flow they're generating, I think they're both are highly compelling buys, despite them being some of the largest constituents in GDX. And there are other miners in GDX like B2 Gold and others that I think are also still very undervalued, that are also highly compelling, that are in that fund. And so those are reasons to be bullish on GDX. Additionally, I'm pretty bullish on the price of gold. Yes, it's soared the last couple of years, and we could be due for a correction in the near term. That wouldn't shock me. But if you think about all that's going on in the world with runaway deficits in the United States, Europe, China, Japan, etc., fiat currency is not doing so well right now. And so gold is a hedge against that. You got geopolitical risks from China and Europe with Russia and Iran in the Middle East. That's another big tailwind for it. Central bankers are buying gold hand over fist, moving away from the dollar to gold as a store of value. So there are a lot of reasons to be bullish on gold. So anyway, that's why I'm bullish on GDX and AMLP. If you like the video, give it a like, subscribe to the channel for more content like this in the future. Thank you very much. See you next time.